Imagine this, a currency without banks, without physical form, and with complete anonymity. Does this sound like an impossible dream or a potential nightmare? Welcome, my friends, to a world where this isn't just a dream, but a rapidly evolving reality. This is the world of cryptocurrency, a unique form of currency that operates on principles entirely different from traditional money. Picture a system that's decentralized, where no single entity or institution holds the reins. Imagine a currency that exists solely in the digital realm, untouched and unbound by physical limitations. Think about the implications of a currency that offers complete anonymity, a cloak of invisibility for every transaction you make. What does this mean for the future of our economy? How does it change the way we perceive and interact with money? And most importantly, what does it mean for you, as a potential participant in this new financial frontier? Welcome to the world of cryptocurrency. So, what exactly is this mysterious cryptocurrency we're talking about? Well, let's break it down into simple, bite-sized pieces. Cryptocurrency is essentially digital or virtual currency, which uses cryptography for security. Unlike traditional currencies issued by governments known as fiat currencies, cryptocurrencies operate on a decentralized platform. Now, you might be wondering, what's this decentralized platform? This is where the magic of blockchain technology comes in. Picture a digital ledger, where all transactions are recorded and verified by a network of computers, instead of a central authority like a bank. This network of computers is referred to as nodes. Each node has a complete record of all transactions, which makes the system highly transparent and incredibly difficult to manipulate. That's blockchain technology for you, the backbone of the cryptocurrency world. Let's delve a little deeper into the realm of cryptocurrencies. Among the thousands out there, two names stand out: Bitcoin and Ethereum. Bitcoin, the first and most well-known cryptocurrency, was created in 2009 by an anonymous individual or group known as Satoshi Nakamoto. It introduced us to the revolutionary blockchain technology and changed our perception of money. Then we have Ethereum, the second largest cryptocurrency by market capitalization. What sets Ethereum apart is its smart contract functionality. Smart contracts are self-executing contracts with the terms of the agreement directly written into code, eliminating the need for a third-party intermediary. To put it simply, Bitcoin was created as an alternative to traditional money, aiming to be a medium of exchange, a unit of account, and a store of value. On the other hand, Ethereum was designed to facilitate software processing using its currency, Ether. Cryptocurrency, in essence, is digital money powered by groundbreaking technology. It's a new form of asset that has the potential to redefine the financial landscape. And while it may seem complex at first, by breaking it down, we begin to unravel the enigma that is cryptocurrency. But how does cryptocurrency work? How can something intangible have so much value? Well, the mechanics of cryptocurrency are both fascinating and complex, but let's try to simplify it. At its core, cryptocurrency is about secure and anonymous transactions. It's like sending money digitally, but with added layers of security thanks to cryptography. This is where the process of mining comes in. Miners use powerful computers to solve complex mathematical problems. These problems are actually cryptographic puzzles, and when a miner cracks one, they validate a transaction and add it to a public ledger, known as the blockchain. This process creates new units of the cryptocurrency, rewarding miners for their work. But it's not just about mining. Cryptocurrency relies heavily on cryptographic algorithms. These algorithms ensure that transactions are secure and that the same coin can't be spent twice. They also make sure that all transactions are anonymous, protecting your privacy. Now let's talk about value. Cryptocurrency doesn't have physical form like coins or banknotes, so why is it worth anything? The answer lies in supply and demand. The value of a cryptocurrency is determined by how much people are willing to pay for it. If a lot of people want a particular cryptocurrency and there's only a limited supply, the price goes up. Conversely, if demand drops or supply increases, the price falls. It's also worth noting that trust plays a huge role in the value of a cryptocurrency. People need to believe in the system for it to work. If people lose faith in a cryptocurrency, its value could plummet overnight. This is why the community aspect of cryptocurrency is so important. It's not just about technology, it's also about people believing in and supporting the system. Cryptocurrency operates on a complex system of cryptography, consensus, and community trust. Despite its intangible nature, its value is very real and is determined by market forces and the faith of its community. Now that we understand what cryptocurrency is and how it works, the question is, should you invest in it? Cryptocurrency, a digital or virtual form of currency, has been making waves in the financial world for quite some time. It's like a wild roller coaster ride, offering potential high returns, but it's not without its fair share of risks. One of the potential benefits of investing in cryptocurrency is the opportunity for high returns. Unlike traditional investment avenues, cryptocurrencies can offer significant returns in a relatively short period. For instance, Bitcoin, the most well-known cryptocurrency, has seen a meteoric rise in its value since its inception. Another potential upside to cryptocurrency investment is portfolio diversification. Investing in cryptocurrencies can provide you with a new asset class that is not directly linked to traditional financial markets. This means that when the stock market is down, your crypto investments may still thrive, providing a hedge against market volatility. However, it's crucial to remember that with high rewards come high risks. One of the primary risks involved in cryptocurrency investing is price volatility. Cryptocurrencies are notorious for their price swings, which can lead to significant losses. This volatility can be attributed to many factors, including regulatory news, technological advancements, and market sentiment. Another risk to consider is regulatory uncertainty. Cryptocurrencies operate in a relatively new and unregulated space. Governments and regulatory bodies worldwide are still figuring out how to deal with them. This can lead to sudden changes in regulations, which can impact the value and legality of certain cryptocurrencies. Investing in cryptocurrency also requires a good understanding of technology. You need to understand how blockchain technology works, how to store your crypto assets securely, and how to avoid falling victim to scams and frauds. In conclusion, while the potential for high returns and portfolio diversification makes cryptocurrency an enticing investment opportunity, it's not for everyone. It requires a high risk tolerance, a willingness to keep up with technological advancements, and a keen eye for market trends. Investing in cryptocurrency can be a high reward but high risk venture. So, what should you remember about cryptocurrency and its investment potential? Cryptocurrency in essence is digital or virtual currency that relies on encryption techniques to regulate the creation of new units and verify transactions. It's decentralized and operates independently of a central bank. This autonomy is one of the reasons for its growing popularity. But remember, with great power comes great responsibility. Investing in cryptocurrency is not akin to buying stocks or bonds. It's a whole new playing field with its own rules. The volatility of the market is something to bear in mind. Prices can skyrocket one moment and plummet the next. It's not for the faint of heart. But this volatility also presents opportunities for high returns. One of the key aspects of investing in cryptocurrency is to do your homework. Understand the technology behind it. Learn about blockchain and how it works. Know the currency you're investing in. Is it Bitcoin, Ethereum, or one of the thousands of altcoins? Each has its own set of pros and cons. Another critical point is to be aware of the legal and regulatory environment. Cryptocurrencies are still a gray area in many jurisdictions. Some governments embrace them, while others shun them. Know where you stand before you jump in. Risk management is crucial. Never invest more than you can afford to lose. Diversify your portfolio to minimize risks. And consider seeking advice from financial professionals experienced in cryptocurrency. Don't forget about security. Cryptocurrencies are stored in digital wallets, and these can be vulnerable to hacking. Protect your investments by using secure wallets and implementing robust security measures. Lastly, keep up with the news. The world of cryptocurrency is ever evolving. Staying informed will help you make better investment decisions. Cryptocurrency is not just a financial trend, it's a technological revolution. Whether you choose to invest or not, one thing is certain: cryptocurrency is here to stay. Please comment, like, and subscribe if you like this kind of content.